Hey everybody, I'm Kramer Howell.
And I'm Rocco Stefanini.
I'm an Ag-Sci major.
And I am a finance major.
So today we're going to give you a little bit of the history of insurance. So we're aware that this topic sounds horribly boring, but bear with us. We're going to try to keep it exciting for you guys because this stuff is pretty important and matters, especially in like your benefits package at your jobs that you're going to have. So hang in there.
Ever since there have been civilizations, there has always been an opportunity to insure goods.
A lot of these situations arose from merchants who were shipping goods. The problem was if their ship capsized or they lost goods in transport, they wouldn't be able to pay back the entirety of their loans. So, to accommodate for this risk, the person loaning the money would require a little bit of extra premium for the promise that if their goods capsized or they lost them due to any cause, they wouldn't owe the entirety of the loan back.
Eventually, groups of people got the idea to start insuring one another's lives.
This was crucial so that wives and children wouldn't be poor and destitute after a father's death. A lot of these early efforts were pretty crude, and they were just based on the age of the person who was being insured. They didn't take into account a whole lot of other risk because people didn't know how to price for this amount of risk.
Enter Edmund Halley. He was a man who was very educated and wealthy and actually embodied the Enlightenment. He was good friends with Isaac Newton and was one of the people that actually convinced him to produce his crowning work, the Principia.
So at the time in Breslau, which was in the Habsburgs Empire, there were annual bulletins to inform citizens on the impacts of the current epidemics of the plague. Edmund Halley wanted to use this information to develop mortality studies about the population at the time. The problem was that these bulletins didn't show the age of death of the people that they were reporting on.
So the reason that this is important is because at the time, the businesses were selling annuities.
It was important for these businesses to know how long the annuitants were going to live. If they were selling an annuity to someone who was going to live for a very long time, there was a good chance of them going out of business because they'd have to keep paying the annuity for many, many years when the person was very healthy, so they shouldn't have been entitled to as large of an annual payment in the annuity.
Halley got a hold of 5 years' worth of demographic data.
The important distinction about this data was that it was for the city of Breslau, which had a fairly stable population over the 5 years. Versus a lot of other cities in Europe which had growing populations at the time where you couldn't really extract any meaningful death information.
Halley then dissected this given information to create the first ever life table.
Life tables are crucial in insurance and actuarial science so that you can see how many people of a given age are going to die and therefore see what the probability of giving a payment is to someone who holds an annuity.
This allowed the businesses at the time to accurately price their annuities in order not to go bankrupt.
Edmund Halley's work inspired a lot of thinkers after him to make more accurate assumptions with regard to life contingencies.
In 1762, the Equitable Life Assurance Society was founded.
This company built off of the concepts that Halley and others had contributed to, namely the mortality rates for each of its insured. By knowing what the rough probability was of a death at a certain age and other certain risk factors, the Equitable Society was able to issue life insurance contracts given the probability of death in any year, which was then discounted back with an interest rate.
Equitable Life is the world's oldest mutual insurer, and it still operates in business today.
As you can imagine, insurance has grown immensely in complexity and takes into account all sorts of different factors, including whether a person smokes, whether they're healthy, what their weight is, but all of it relies on these founding principles that Halley and others contributed to so much.
Well, I wanted to thank you for watching our little video. I hope it was informative, and I really hope it didn't put you to sleep.